Good morning and welcome to MarketCast 30. This is the MarketCast that when you search for it on the internet could bring you some surprising and distressing and shocking results. I want to start off this morning from this beautiful sunny Bournemouth. We're in the AF Oliver offices here in the heart of, well, it looks like summer here on the south coast. And I want to start off by apologising for the voice. On Saturday, I was at Wembley to see the mighty Eagles prevail over Aston Villa. Sorry to anyone that's watching this in the Midlands and make their way to the FA Cup final. And unfortunately, the voice hasn't quite recovered. And as far as the shirt is concerned, well, this was a birthday present, but it pays homage to the grey terrorist, which is the name that I've given to one of my cats who helps me compile the MarketCast by placing her paw on the keyboard at the appropriate moments. But let's get into the MarketCast proper, because I know that's what you're there for, and we're going to make sure that we stay inside 30 minutes this morning. So, if I can make the remote control work, no. Okay, let's. There we go, that's a slide. It's working, right? This is the beauty of doing these sorts of things live. The presentation after that brief interlude, I hope you enjoyed that. That was the face of sheer panic going on there. This MarketCast is called The Cavalry is Coming, because last MarketCast we talked about the summer dip. And now just have a little think about the word dip, because it wasn't one that I plucked out the air. It's one I used very, very deliberately. Because a dip indicates that you're going to come out the other side. If you look at the dictionary definition of the word dip, which isn't easy to say, let me tell you, it's to lower and to raise again. Or I think you can get a dictionary definition that actually says to plunge and emerge. I don't think we're going to be doing any plunging this summer, but as I said last time out, we are going to do a dip, but I'm equally convinced that the cavalry are on their way and we are going to come up the other side afterwards. So let's have a quick look at the summary then. Dip is coming, outlook looks good. Completions in March were pretty much as we expected, weren't they? The rush for everybody to beat the March 31st deadline before the stamp duty concessions were whisked away by this current Labour government. It was massive. I think they were constrained. The volumes in March were constrained only by how fast the conveyances could work. Absolutely huge. The volumes were as high as they were going back to 2021, which was the last time, of course, that the government messed with stamp duty. We come on the back. I'm going to talk about tariffs this morning, and I'm going to talk briefly about the global economy. I am no economist, so I'm not going to make any predictions as far as that is concerned, but obviously it affects us in our everyday life and our everyday work because it massively affects consumer confidence. And I'm going to show you some very scary numbers about what the background, the global economic background has done to consumer confidence in the UK. And that very much does affect us. And I've proved that in MarketCast before, where I've shown you how the confidence today has a direct effect on the way that the market is going to operate 3, 4, 5, 6 months further down the line. We've got a drained pipeline now. Everybody that could complete before the end of March completed. Obviously, people hate paying stamp duty, second most hated tax in the UK. So everybody rushed to get their deals done by the end of March. And that inevitably means if you stick your foot on a pipe and you let the whole thing all rush out by a certain date, then once that has gone, you're obviously left with a lower flow afterwards. And that's what we've got. And that's where we are right now. We're in the middle of that. We've got better news on the way. The cavalry are coming. It looks almost certain. We've just had an inflation drop. So we'll come back to the inflation numbers in detail in a moment or two. But I think there's more good news on the inflation front coming. And that, again, against this backdrop of tariffs and everything that's going on globally, interest rates look set to fall as well. And the lending institutions are getting ahead of that curve. And you can see they're getting more and more competitive in the lending market too. Energy and fuel prices also due to come down. What was interesting were the Rightmove numbers for asking prices in their April survey, in their April report, which went up much higher than expected. I think that's probably more optimism than practical reality. And let me just see if I can make this work. No. and then we'll go to there. I'll do this manually. And, this is a chart. Now, normally I show you the property mark numbers just to show you the number of deals being done right now at asking price or better, because that is a fantastic indicator of the way that the market is genuinely moving. And a lot of people have said to me, why do you feel there is going to be a dip in the market this summer? Is that dip a real thing? Is it in your head? And I thought this was a really good way for me to indicate why I believe that way. A couple of slides here in the deck. This one, and then I want to show you an RICS slide afterwards. Look, this is the property mark survey. So these are the independent agents who all report their numbers up into center, and then they publish these. Unfortunately, they always publish them a little bit late. So this is the latest report, but it refers to February numbers. So it's a little bit out of date, but it beautifully shows you why I believe we've got a summer dip coming. These are the number of sales agreed. So this is a really good forward indicator. So these aren't deals done yet. These are sales agreed. It's difficult to see, but there's a little line here, little grey line here, January, February, and that's plotted against previous years here. And normally January into February is quite a significant increase. Those 3 previous years demonstrate beautifully. Normally what we see, it's that spring build-up in sales agreed, and you can see that there was actually a slight fall from January into February. It's just another really good indicator. Let me show you the RICS numbers here. I've ringed them in red. Over here, these are volumes. So these are the numbers of sales expectations. In here, in here, these are prices. So these indicate how the surveyors in the UK believe that volumes and prices are going to move. The azure line here is over the next 12 months. The solid mauve line here is over the next 3 months. Have a look. In terms of volume, look at this. That volume line has slipped down below the 0 line, which means a majority of the surveyors in the UK believe that volumes are going to be lower over the next 3 months rather than higher. Sounds like Bruce Forsyth. Play your cards right, doesn't it? And if you look over here at prices, the same applies. Over the next 3 months, the majority of surveyors in their March survey, the RICS March survey, believe that prices are going to be lower rather than higher. But, and this is why I believe it's a dip, if you look at the 12-month picture, you can see that a strong majority believe that prices are going to be higher rather than lower. And you look at your 12-month picture over here, again, a majority, not quite so strong, but a majority believe that volumes are going to be higher rather than lower too. All of this characterizes the dip that I have been talking about now for the best part of 3 months. You heard it here first. Let's have a little look. Hopefully that gives you some reason why I'm so convinced, underscores why I'm so convinced that we are going to see a dip in the market this year. Let's have a little look and see what's going on in the press and what the public are actually reading about. Always interesting to pick out the stories in the Standard, which are generally tuned more into the London market, like a different country, different market, but nevertheless, it actually does feed into the overall mood. This was interesting. Look in here, hot London postcodes, 5 in demand areas. Now you'd think that's actually a good news story, 5 in demand areas. But see what's hidden in the headline. 5 in demand areas beating the sales slowdown. So it's essentially that's a subliminal way of people reading that are reading that there is generally a slowdown. These are areas that are beating that slowdown. So they're already actually suggesting that there's a slowdown coming as we approach summer. A lot of press. This was the Persimmon deal that was done, that sort of their antidote, if you like, to the missing Help to Buy, which, as we all know, obviously disappeared in 2023. And the mortgage guarantee schemes have never really done it, have they? And Persimmon got together with a lender, and that has actually picked up a lot of press and still does even now. If we come more into the professional media, into the trade media, Hamptons show buying and renting on a par. How many times over the years, during your career, how many times have you run an ad that says, why rent when you could buy? Well, look, we're back here again. Those prices. And in the big expanded deck, if you're an AF Oliver client, by the way, you get to see those expanded decks. But in the big expanded deck, we always show how rental and selling prices are actually comparing. And they're, according to Hamptons, certainly in the capital, they're pretty much on a par right now. And having a look here in the Guardian, how looser affordability rules will actually boost home ownership in the UK. This is a really big story. It's going on right now. The lenders are all clamoring to try and lend people money in an era of lower volumes. They need to lend that money, and they're working with the government to loosen the affordability rules. Those affordability rules, by the way, have actually been incredibly important to stop meltdown and remortgages. You know, when we've seen the market come under pressure in recent years, the level of remortgages have been lower than ever before in those sort of market conditions. And that's as a result of very strict affordability rules. But they are talking about loosening those now. That's just one more member of the cavalry that are charging over the hill. Now, I've got an interesting, before I go into my sort of background, global economics, this could be a new career for me on the BBC, couldn't it? The economics correspondent. But before I go there, I've got a new word for you. And actually, when I looked it up, it was in the Oxford English Dictionary. Look, terrifying. Come on. The definition of terrifying, characterized by or causing fear due to the arbitrary implementation and variation of import duties, provoking anxiety through unpredictable tariff policies. I wonder who's at that at the moment. Well, let me give you a clue. Scary? I'm absolutely terrifying. There you go. That's me putting it in a sentence. Of course, he hasn't been out of the headlines, has he? Donald Trump, with his extraordinary quixotic determination to bring life back to the US Rust Belt. You know, the idea is that if I slap tariffs on everyone else that's making stuff around the world, they'll have no choice but to carry on making it in the US. And why does that matter to us? Well, it matters to us because it affects the bond markets, and the bond markets affect interest rates, and interest rates affect our housing market. So it is, this is not just a background thing that's going on somewhere. It is directly related to our short-term sales prospects. So that's really important. And the nice part about it is I've decided to simplify this whole tariff thing, because as you know, it's like we're going to tax China 100% today and 150% tomorrow and 25% the day after in UK. I've simplified it. I've put a chart together for you, which at a glance will show you how the tariffs actually work. There you go. There it is. So I'm glad you've all got that now. Great. So now you can actually say that you understand the tariffs perfectly after me showing you and sharing that chart with you. Let me show you a chart that's got perhaps a bit more significance. This is the consumer confidence chart. Now, I'm hoping that you're a regular MarketCast watcher, so you will have seen how I've correlated the numbers on this chart with the amount of deals done at asking price or better, because that is a direct connection between these two things. How confident people are, and then what they're prepared to do to achieve their aspirations in terms of buying a home. Look at this. The background of these tariffs, that terrifying situation that we're currently in, has had a dramatic effect on consumer confidence in the last survey. These numbers were collected literally just within the last couple of weeks. This data was collected between April 1 and April 14, and so they're very, very recent numbers. Two varies in one sentence. You can understand how recent that actually is. And this has taken a massive drop. So a really quick trot through these. The red line, you'll be familiar with this chart if you've watched this before. That is the overall confidence index. So that is the amalgam of all the measures that they check, the metrics that they measure during this survey. 2,000 individuals. They do it every month. They've been doing it for 50 odd years, this survey. And you can see this has dropped down deep into negative territory. Here's zero here. Anything below that line means the majority of the people that they spoke to in this survey believe things will get worse over the next 12 months. If it's above the line, then the majority thinks it'll get better. A bit like the RICS thing. And you can see this has dropped now deep down into negative, not a record negative, but a very, very low score. The blue line here, how you feel the UK economy is going to fare over the next 12 months, is actually down to the same level that it was after Liz Truss budget, the mini budget, the disaster. Look where it's come from here. If I take you back to last summer, only just a year ago, this is June 2024 here, and look where we've come from here. Since the arrival, of course, that's when in June 2024 is the arrival of the new landslide government that we've got in the UK. And you can see that the policies and the global background that's happened since, and this is where people are in their views on how the economy is going to go over the next 12 months. It's very serious, and it really does feed directly through to the market. We've proven that. In terms of people who own personal finance, that has stayed remarkably resilient. And people still believe, you can see that that's pretty much on that line there. So you've got the situation where generally it's sort of even Stevens about whether people feel they're going to be better off or worse off over the next 12 months. Here's the thing, I can tell you almost certainly they're going to be better off, because right now the rate of wage inflation in the UK is outstripping the rate of general inflation in the UK by almost 2 to 1. So they're actually going to be better off. Anyway, the way that feeds through, the important thing to us is this is the property mark chart that I was talking to you about a little earlier. And these are the percentage of deals done at asking price or better. And you can see then, since coming down here at that incredible peak in 2022, we've bounced along the line here, a little bit of an uptick in autumn 23. But you can see where we've gone, and you can see now we're into the preparation for what I believe is going to be this summer dip. So all of that looks like pretty bad news. So I can imagine you saying to me, okay, Matty, where are the cavalry? Well, they are on the hill. Let me share with you some much brighter data here. First of all, inflation. The inflation numbers really matter, because the inflation numbers affect the decision of the MPC, the Monetary Policy Commission, who determine where interest rates are going to go, and that then has a direct correlation as far as the market's concerned. Inflation, the next inflation numbers that we're going to see is not till May the 21st, but almost certainly that's going to be good news. And crucially in there, lower energy costs and lower fuel costs. And it is amazing the effect of lower fuel costs, because people have that headlined in front of them every single day of their working or their general ordinary lives as they drive along, because plastered on every street is the petrol pump prices. And it's amazing how that affects how people feel. It's a really big and constant reminder for them. Here we go. These were the inflation numbers for March. So don't forget, there are no numbers in April. You go straight from March into May. So these are the most recent numbers here. And you can see this it's just come over the edge here. And so the headline number, which generally the newspapers pick up and what have you, which is the CPI, the Consumer Price Index. And that you can see has dropped down to 2.6%. So from 2.8% down to 2.6%. I prefer to have the CPIH, so this is the Consumer Price Index with home owner costs in it too, but that has also come down from 3.6 to 3.4%. And really importantly, this horrible mauve line here that was being really sticky, these are the owner-occupier housing costs. These are costs that are directly related to our prospective new homes buyers. And you can see that's tipped over the edge too. Cavalry are on the horizon. This is good news. This is inflation coming down, because of course we've got on Thursday, May the 8th, we've got the next Monetary Policy Commission meeting in there. I've also put in June 19, because I think there is a very real prospect that we could actually see an interest rate drop that was a very high note, wasn't it? Drop, there you go, that's better, on both of those dates, on May 8 and on June 19. So where are interest rates going to go? Here come the cavalry. If I had a little bugle now, I would be blowing it for you. So this is the journey of interest rates. And in recent ones, just as a sort of an aid memoir for me, really, rather than you, you can see there, the first reduction came last August 24, reduced from 5.25 to 5. And then in November from 5 to 4.75. And then you can see here in February, 4.75 to 4.5. And it was held at 4.5 last time round. I'm saying it's nailed on. You heard it here first, that we're going to see a 25-point drop at least in this next one that's coming in May. And I reckon, well, okay, that's maybe going a bit far, but I think there is every chance that we could see another 25-point drop when we come to June as well. So we're going to see headline, that Bank of England base rate that, even though it doesn't have a massive direct effect on people, it's all over the press and it really affects confidence. And we could see it starting with a 3. And if you look at what the lenders are up to, look, here's the direction of travel. Here's where we were. You want me to take you back to the middle of 2024. Here's where we are. And so if you look now, this is the real sort of headline one that people know about, particularly first-time buyers that are looking for 90% loan-to-value mortgages. Now, right now, when I showed you these numbers last time round, that number was 5.26. These are the average. These are the basket of all the available deals from the lending institutions. Dropped to 5.11. You'll see that under 5. By the next time I show you this board, I'm predicting that will be below 5%. And I reckon there's every chance that by the end of the year, it's going to be very close to 4. So it's the cavalry. So where does that leave? So this is my market factor matrix, TM. And this is where we were in April 2024. And let me give you a sense of how that has changed over the last 12 months. It sort of looks like this. It's not nearly so sexy that when I'm doing it with a remote control, is it? But the stamp duty changes. This is going to ease now, and we've come through that hiatus. It's still having a big effect at the moment because obviously everybody raced to try and get their deal done before they lost their stamp duty benefits. But you can see here in the really nasty zone in that bottom right-hand corner, so high impact, very negative effect, high mortgage rates, but that's easing and moving that way. Low affordability, that's also moving that way. Consumer confidence has taken a huge jump down this month. You saw those numbers, so you can see why that's there. But general inflation is actually now moving into positive, but lower effect. Mortgage availability is very, very good indeed. So that's why that's in that top left-hand corner. It's not really an issue. And you can see things like supply and demand have all moved out there. Watch out for that employment market because it is still continues to drop and have a more negative effect. And also the sharp-eyed ones amongst you will have noticed that moved in this direction over the last month. So it's actually more in people's heads. So that's important too. A quick run through the stats then. I mentioned this earlier on. Look at this. The right move, monthly average asking price went up by 1.4%, which is really surprising. I think that's taken everybody aback, even right move. I think that we've got some very enthusiastic sellers. Is that right? Optimistic, that's the word I'm searching for. Sellers out there. Putting the property on right at the start has a massive effect on the time it's on the market. That's proven again and again and again. The important takeouts out of their executive report here, the level of agreed sales falling through remains steady, which is I didn't expect to see that after the stamp duty hiatus at the end of March. It's quite extraordinary there. So even with buyers that have missed that March deadline, most of them are still progressing, which is great news indeed. And the queue of buyers completing home moves has eased. 24,000 successfully did that in those last few days leading up to the end of March. If we look at the Zoopla numbers here, 1.8 they reckon now. This is in their algorithm that includes asking prices, sale agreed, mortgage approvals and completions. all in that algorithm there. House price inflation slows to 1.8%. This is what we expected, isn't it? And we are going to see that now continue into the summer. Looking at their regular chart here, sales agreed are up by 5%. Stock of homes for sale up by 11%. So we've got that market there that after a long time out of balance is very much coming back into balance now, which if you think back to the market factor matrix there is why you saw the availability moving left into a less an area of less concern. Mortgage approvals, no need for me to dwell too much on this. The latest numbers we've got were February, and you can see that it was almost 66,000, 65,000 odd, what was it? It was 65,481. You know what that means? It's 2/3 of completions 3 months down the line, and that means 100,000 completions. That means 1.2 million sales a year. It's the faithful 5, isn't it? They're the numbers that we're actually heading for. And if you look at these numbers, you can see this uptick. Expect next month, so these are the Feb numbers, expect next month the March numbers to be right up here, and they will be, and then we'll see the drop for April as we predicted for you back last January, okay? So this is happening exactly as we expected it to happen, and I believe the market is actually, it's literally tracing its steps precisely as we predicted it would at the start of the year. But it's easy telling you where they've been. It's not quite so easy telling you where they're going to go next. Let's have a look here at where we're off to next summer, or this coming summer, sorry, and into the end of the year. These are actual numbers, and for me, I've got to say that this has been at the front end of the year. This has been more resilient than I forecast back in December. I had this dropping quicker into here. I still believe this is the pattern that we're actually going to see, but I think that these March numbers were significantly underpinned by the opportunity to do deals where people could exchange and complete really quickly in March to beat that stamp duty deadline. It had such a big effect. And so we saw in the nationwide numbers we saw last month that they held absolutely steady. Again, in the big AF Oliver housing market report, those nationwide numbers are there in detail, as are the regional numbers, because of course we all know the problem with averages and how the micro markets in the UK can differ by up to 10%. So it's hugely important that you're looking at your own local market and not the national averages. The big deal with national averages is they dramatically affect how consumers feel about the way things are going and will affect their buying decision. So it will affect the process. So it froze here, or I say froze, it stayed absolutely static here at 3.9% annual inflation. So the price of an average house in the UK is exactly 3.9% higher than the average price in the UK, according to the nationwide, of course. It's a good index, it's not perfect, none of them are, but 3.9% higher than where it was at this time last year. But I believe that we are going to see this summer dip now come upon us, and I think that when we see the April numbers, it will still be in inflation, but it will be a lower rate of inflation than it was in March. And I think that will continue to fall. And then I think there is every chance we'll either be flat or negative in June, July, before we start to come out the other side. Here's the cavalry riding over the hill. And I believe that there is a really good opportunity to take advantage of the up curve, which I am convinced that we are going to see, because there are so many indicators there suggesting that this will happen at the back end of the year. And all of that is linked to all of those factors that I've covered as we've gone through, interest rates in particular. So in my new determination to keep us within 30 minutes, despite the stuttering start when the technology let me down, let's get into the summary. So the summer dip for me looks absolutely nailed on. I know it's not effectively showing in the numbers yet, but you guys are out there, so you're on the front line and you know what's going on, and I do too. And I think that we can already see and already feel the effects of that. In fact, it might actually even be a little bit deeper than I thought. So I've just showed you that last chart there, which showed you inflation at 0 June, July, might even dip into negative growth. That's a crazy phrase, isn't it? But it might even dip into negative. But the cavalry are on the horizon. We're talking about interest rate reductions. We are talking about high competition amongst the lenders who are going to be falling over themselves to get ahead of the curve on those interest rate reductions. We are talking about lower energy prices, lower fuel prices. We're talking about falling inflation. So, these are the cavalry. This is going to happen. This is going to play out over the next 2 or 3 months, and it will feed into the market. I'm absolutely certain. It will feed into the market in September, October, November. They are going to be really good selling months for you guys this year. I'm staying with my forecast of annual price inflation at about 1.5% when we get to the end of the year. I still think that looks rock solid and robust, and despite the distortion that we've seen in volumes because of the stamp duty changes at the end of March, I still believe we're going to end the year at 1.2 million. It's the faithful 5 numbers. Everything I see suggests that that's where we're going to be. And finally, I think that the new home share of the market is going to stay around 10%, which is where we thought it was going to be at the start of the year. The next MarketCast is going to be on Friday, May the 23rd. We will know so much more then about the fallout and hopefully the terrifying situation that we're in has maybe eased itself. Interest rates, we'll know, we'll have had an MPC meeting. I'll be able to give you a much more accurate picture of where and how deep that summer dip's going to be before we come out the other side. Sorry about the little glitch at the start. Big thanks to the team here this morning, Hannah, Joan and James. Have a fantastic week with the heat wave, and I shall see you on May the 23rd.